What if I told you the rules about money that most people follow are the exact same rules keeping them broke? Yeah, that's uncomfortable. Here's the truth nobody really talks about. Nobody sits you down at 18 and says, hey, here's how money actually works in America. No class, no manual, no warning label, just good luck out there, kid. And the crazy part, the people who figured this stuff out early, they didn't work harder than you. They just knew a few things that nobody told you. Today, we're breaking that wide open. These are the investing secrets I wish someone told me before I turned 20. And honestly, they're things most 35-year-olds still don't know. Quick thing before we dive in. If you're new here, welcome to Jordan Money Lab. We break down money, investing, and building wealth in the simplest way possible. No confusing finance jargon, no Wall Street nonsense, just real stuff that actually works. Hit subscribe so you don't miss what's coming next. Now, let's get into it. This chart right here is why this video exists. Two people, same age, same starting point. 20 years later, completely different financial lives. And the difference wasn't income. It wasn't luck either. It was what they knew and when they knew it. So if you're 18, 22, 28, or even 35, and nobody's ever broken this down for you before, this is your moment. Let's go through it, one secret at a time. Okay, first secret, and this one is either going to excite you or terrify you. Honestly, probably both. Ready? Time is worth more than money. I know, you've probably heard something like that before, but let me show you what it actually means with real numbers. Alex starts investing $200 a month at age 20. Jordan starts investing $400 a month at age 30, literally twice as much. So who ends up with more money at 65? Alex, investing just $200 a month, ends up with around $700,000. Jordan, even while investing twice as much, ends up with around $500,000. Alex invested less money and still ended up with more. How? One word. Compound growth. Your money earns returns, and then those returns start earning returns too. It's like a snowball rolling downhill. The earlier you start, the bigger the snowball gets. So here's the uncomfortable question. Every month you're not investing, what is that costing you? Probably way more than you think. But here's the thing. Knowing you should invest early is only step one. Where you put that money, that's where most people get it completely wrong. Which brings us to secret number 2. Okay, quick question. What if someone told you there's a completely legal way to never pay taxes on a huge chunk of your investment profits? Sounds too good to be true, right? Except it's real, and it's been sitting there the whole time. It's called the Roth IRA. Here's how it works in plain English. You put money in, money you've already paid taxes on. It grows for years. And when you take it out in retirement, completely tax-free. For 2024, you can contribute up to $7,000 a year if you're under 50. That's about $583 a month. And if you start young, say around 22, and stay consistent, that account could eventually grow to over $1 million, completely tax-free. Now, where do you open one? Places like Fidelity, Charles Schwab, and Vanguard let you open a Roth IRA online for free. Takes about 10 minutes. That's it. One account, 10 minutes to open, potentially life-changing later. And most people your age have never even heard of it. So now you know where to put your money. But what do you actually put inside that account? That's where secret number 3 comes in. And honestly, this one surprised me too. Let me ask you something. Do you really think you can outtrade Wall Street professionals? People with billion-dollar computers, teams of analysts, and decades of experience? Here's the humbling reality. Over 90% of professional fund managers, people who literally do this for a living, fail to beat the average market return over a 15-year period. Over 90%. So what do smart, quiet investors do instead? They stop trying to beat the market. They just buy the whole market. It's called an index fund. Think of it like this. Instead of betting on one horse to win the race, you buy a small piece of every horse. Instead of trying to guess the winner, you own all the winners. The most popular example is the S&P 500 index fund. It tracks 500 of the biggest companies in America: Apple, Amazon, Google, and hundreds more. Historically, the S&P 500 has averaged around 10% annual returns over long periods of time. That means $1,000 invested today could grow to more than $17,000 over 30 years, without picking stocks, without day trading, without constantly staring at charts. Boring? Maybe. Effective? Absolutely. So now you've got the account, and you know what to put inside it. But here's the part that quietly destroys people's progress. Secret number 4 is the one that keeps most people broke, even when they're doing everything else right. There's something quietly stealing your money right now. You can't see it, most people barely notice it happening, and nobody really warns you about it. It's called inflation. Here's what that looks like in the real world. 10 years ago, a basic grocery trip might have cost around $100. Today, that same trip could easily cost closer to $140. Same groceries, way more money. That's inflation. Every single year, your money buys a little less than it used to. On average, inflation in the US runs around 3% per year. Now here's the scary part. The average savings account at a big bank pays around 0.5% interest. So while your money grows by 0.5%, the cost of living rises around 3%. You're slowly losing ground while your money just sits there. So what do? You make your money work harder than inflation. That's where investing, through index funds and accounts like a Roth IRA, stops being optional. It becomes necessary. Because keeping all your money in a savings account isn't really playing it safe. It's a slow leak that most people never notice. Okay, we've covered the basics, but I saved the most underrated secret for last. This one completely changed the way I think about money, and almost nobody talks about it. Here's a question that might sting a little. Why do some people with average incomes build serious wealth, while some people with high incomes stay broke forever? It's usually not because they work harder, and it's not because they're smarter. It's something called lifestyle creep. Here's how it works. You get a raise. Great. So you upgrade your apartment. You buy a nicer car. You eat at better restaurants. You start taking more expensive vacations. And before you know it, every extra dollar you make is already spent. Your income went up, but your savings stayed exactly the same. The people who actually build wealth do something different. They pay themselves first, before the bills, before the shopping, before lifestyle upgrades eat the paycheck. A percentage of every paycheck automatically goes into investments. No debating it, no overthinking it, it just happens. Even if it's only $50 a month when you start. Because you're not just building money, you're building the habit. You're building the system. And systems beat willpower every single time. That's the real secret behind all the other secrets. It's not about knowing more information. It's about building a system where the right things happen automatically, whether you feel motivated that day or not. Let's bring it all together. Secret number 1, time is your biggest asset. Starting early beats almost everything. Secret number 2, open a Roth IRA, tax-free growth. It takes about 10 minutes. Secret number 3, stop trying to pick stocks. Buy index funds and let the market do the heavy lifting. Secret number 4, inflation never stops. If your money isn't growing, you're slowly falling behind. Secret number 5, automate your investing. Systems beat willpower, always. None of this is complicated. You don't need a finance degree. You just need to know where to start. And now, you do. But here's the thing. Knowing these secrets is only half the picture. The other half? Figuring out where you actually stand right now. Because most people are stuck at one of 5 financial levels without even realizing it, and the level you're at completely changes what move you should make next. I broke down all 5 levels in detail in the video right here. Watch it next to find out which level you're currently at and exactly what to do to move up. And if this video helped you today, share it with one person who needs to hear it. Seriously, it might be one of the best things you do for them this year. I'll see you in the next one.